Say that at the end of the episode. If you enjoy this format, please hit like, share it with your network, and don't forget to subscribe to our channel to stay up to date with more exclusive content. I'd like to start by thanking all our standard members for their continued support and say that at the end of the episode, we will open the floor for a few questions from the audience, so feel free to drop your questions in the YouTube chat box throughout the session. Perfect. So I'm pleased and honored to welcome today's guest, Bernhard Schweitzer, Head of SAP Digital Currency Hub. He will explain how enterprises can connect their core finance system to blockchain-based payment rails, enjoying the benefits of digital currency payments while running integrated, consistent, and compliant payment processes. Bernhard, thank you so much for being here, and I hand over to you.
Thanks, Tamara, for inviting us, and we are really happy that we are now a member of the Digital Euro Association since a good 9 months, and I'm very, very happy and honored to introduce you to what we are doing here at SAP. So, of course, as a good SAP presenter, I always have a couple of slides with me, which I wanted to share with you. But hopefully you won't be bored by just a deck of slides. Of course, I will also show you a little bit what we are really doing as part of our product. Now, before we get started on the digital asset scene, I basically would want to take you a little bit through what SAP is all about. I guess most of you certainly do know SAP. And SAP basically is the largest provider of enterprise application software. A couple of facts that you probably do not know is that 84% of the global commerce run through our systems one way or the other. I mean, that's an amazing number. And if you think about 84% running through our systems, 84% of payments one way or the other also touch our systems. And this is why we need to be very, very mindful of how we can support our customers today, but not only today, also in tomorrow's world of digital money, of digital assets. And 98 of the 100 largest companies use SAP, which I think is also an amazing number. Many people always think about when we talk about SAP, it's only the big companies that do use SAP. And in fact, this is not true. 80% of our customers are SMEs, are small and mid-sized enterprises. And the project I'm introducing to you later basically did start at the mid-market. We were talking to mid-market customers, how can we solve their challenges? And as a matter of fact, especially the mid-market customers complain about cumbersome and expensive cross-border payments. And as you all know, we will see how digital currencies integrated into an ERP system can solve that. SAP is not only a heavyweight in enterprise application software, we are also very much focused on innovation. We have very much invested through our Sapphires Ventures in over 180 companies in more than 10 countries. So we really kind of scout and look and see what's also happening around us, because we always want to serve our customers in the best possible way. SAP is about helping the world run better and improve people's lives. So whenever we can cut out unnecessary costs, unnecessary intermediaries, making business more effective and efficient, we do believe we can contribute to our purpose. And that purpose is well grounded in our mission, where we wanted to help every business to become the best run business, bring out the best in every business. Want to help business transformation, want to help to make value chains more effective and efficiently, and also focus very much on sustainability. If you take a look at SAP at a very high level, we basically start always on the application layer. It's our core ERP, our core finance system, which basically are one of the big strongholds of SAP. We basically combine the flow of goods, finance, and all data points regarded to customer and human capital to people in one homogeneous suite. On top of that, we have our business data cloud, which basically combines all data streams into one platform that allows us to do analytics in a 360-degree fashion and also form the basis for our business AI layer, where we have agents, where we have agentic AI in finance, in supply chain, in HR, orchestrated by our user interface, by our agent Joule, which allows you to easily interact in native language with an SAP system. So it's not the SAP that you probably have known since years. It's the modern SAP. It's a consistent application layer. It's a consistent data layer powered by agentic AI. Now, diving now a little bit deeper into what we do, what my team does with the SAP Digital Currency Hub. So we are part of the SAP Business Suite. So we sit somewhere between financial management and spend management. And we also tie very closely into the ecosystem. As you can imagine, if you talk about payments, you need all the digital asset players. You need the issuers of the digital assets. You need the custodians. You need the on and off ramps to come into that modern world of money. And this is basically where we sit. Strong ecosystem play grounded in the SAP Business Suite between financial management and spend management. Now diving a little bit deeper into my own topic that is very dear to my heart, the SAP Digital Currency Hub. When we did look at payments, by and large, we figured out that especially cross-border payments are very inefficient. And I guess this is a common theme that everyone knows. Interesting is the data point that we just read through from an EY study that was conducted in September 2025. 41% of organizations that have already used stablecoins, digital form of money, report cost savings of 10% plus. So it's not just an academic exercise that the new digital forms of money bring massive cost savings to enterprises. It's a matter of fact that is testified by that survey. Good. So this is the way we view the digital money landscape. So basically from central bank digital currencies, the digital euro, which is the name of our joint association, the Digital Euro Association, tokenized deposits, deposit tokens, and fiat-backed stablecoins, all that forms of digital money, SAP would want to be able to allow customers to use them for payments. If we look at these different forms of digital money, we basically, from a technical perspective, see two different ways of addressing it. We see the way of addressing it via very traditional, classical IBAN bank account numbers. So if we look at some forms of tokenized deposits, so basically bank wraps a bank account number around the tokenized deposit and makes it look bankish. While technically it's a digital form of money to an ERP system, it very much appears like the normal form of money. I can create my business partner, I can assign a bank account, and I can basically drive it through the stack, through that tokenized deposit stack with all the benefits. If you look at the stablecoin, of course, is different because the stablecoin doesn't speak a bankish language. The stablecoin resides on a blockchain that I need to address. The stablecoin has a wallet address that an ERP system doesn't understand. And the stablecoin uses a currency, USDC, USDT, Euro, from all Unity, you name them, which the ERP also doesn't understand. And we need to bridge that world of the modern world of digital assets that are residing on the blockchain, addressed in a blockchain-based language via wallet, via blockchain, via a different name of the currency. And this is basically what we have built. As SAP, we address the entire spectrum of digital money, ranging from central bank digital currencies, tokenized deposits, to fiat-backed stablecoins. Whatever you wanted to choose as means of payment, we have the technicalities to do it. Digital Currency Hub is geared towards that second part of digital money. It's geared towards digital money that basically resides on the blockchain and is natively addressed via a wallet. Digital Currency Hub facilitates payments with stable coins by building the bridge between the core ERP system, which you see depicted here at the bottom, and the crypto asset service providers or the broader crypto ecosystem, the stablecoin ecosystem. So we are basically translating core ERP language into blockchain-based language for a seamless execution of payments. And I think it's not necessary to talk so much about the value proposition, blockchain, stable coins, and tokenized assets bring to the payment process. I want to stress more on the right side what we have here. It's that full payment automation that Digital Currency Hub enables our customers doing. So it's basically making stable coins a means of payment that is on par with traditional money, that is on par with the digital euro. So customers really do have the choice. And it's all about compliance. It's about tying things together in a compliant way, making sure that you can account for it, making sure that your processes run as smooth as possible. And what I wanted to do next is, rather than just showing you slides of what SAP is doing, I want to move screens and would want to move over to the product and show you really what we can do. How such a payment process with stablecoins looks in a classical business system. This should just give you the impression that payment with digital money with stablecoins is real today. So it's not just a POC, it's a real thing. And I basically start with an invoice. So every enterprise needs to book an invoice in their core finance system. If they do it with our system, with our S4 system, whether they do it with our competitors' products, whether they do it even in a software such as Datev or QuickBooks, this is something which any enterprise needs to do. And this is how such an invoice in a core finance system looks like. You basically know the invoicing party, you know the cross invoice amount, you know the due date of the invoice, and of course you have the reference number, which is the reference of the invoice. This is something which is important later on to message to your counterparty so that they are able to reconcile incoming payments. What we have added to that very traditional invoice, we have introduced a new payment method. And that payment method is called SAP Digital Currency Hub. You could also call it stablecoin payment. And that new payment method basically tells the system whenever that invoice is paid, do not send it to a bank for a payment execution, but rather execute the payment via a stablecoin rail. And in our scenario, we use Digital Currency Hub to do then that translation of the traditional business language into the wallet, into the crypto, into the blockchain language. Everything else remains the same. It's just that kind of tiny little field that we've added on the invoice. And normally you can say it's a SEPA payment, it's a check payment, it's a credit card payment, and it's now a stablecoin payment. So not much of a change actually for an end user, which is quite nice. So what happens from a procedural perspective next is that customers do a so-called payment run. That payment run basically collects invoices, puts them together more on a traditional notion in a so-called payment file and a payment medium created. And we basically, on a regular basis, whenever that end user starts a payment run, most enterprises do that once per day. You can also initiate a payment run instantaneously to have really kind of instant payment, which is, of course, very beneficial in the case of blockchain-based payments. You create a payment medium, and that basically payment medium goes to our tech stack and then initiates the payment on the blockchain through a custodian. All that happens magically behind the scenes, and then you just get the confirmation of the payment. But rather letting that happen behind the scenes, I would want to show you how we do the translation piece. So I basically show you the product Digital Currency Hub here at action, how we do that translation piece. Typically, an end user wouldn't see that. It's kind of a fully automated process. We follow the notion of an account. We call an account always the combination of a certain stablecoin and a blockchain network. And we mimic that notion of account also later on in the core ERP system in the cash management component. And we tie our assumption on the fact that a stablecoin is a cash equivalent. So one USDC, $1, 1 euro, EU, AU, 1 euro. So basically having that one-to-one fixed relationship. Then, of course, from the ERP system, from my invoice, I know the business partner, that was Greenfield Group. I know the invoice amount, that was 44 cents. What you see now happening is that the system automatically suggests the right cryptocurrency, the network on which we are going to settle, as well as the pay to address. That combination, that triplet of the currency, the network, as well as the pay to address, we call a payment agreement. So as an enterprise, you do agree with your business partner which currency you use for settlement, which blockchain network, and of course your counterparty needs to tell you your wallet address. It's not more magic that you need for execution. Then, of course, we also have the reference. That is typically the invoice number that you then later on can use for reconciliation on the pay as well as on the payee side. If I hit the create button, we basically interface now to a crypto custodian. Again, we are that bridge between the classical ERP world and the digital asset world. So it's not SAP being a crypto custodian. It's not SAP providing self-custodial wallets, just us connecting to the licensed financial services entity, the crypto asset service providers, basically making an API call to them and instructing them to make a withdrawal from my wallet to that basically counterparty. And we also, of course, send as part of that API call all required compliance information for AML checking on the provider's side. Then I can also look at the business transactions that are happening. And this is looking very much like a kind of statement where you see open business transactions. These are transactions that we have sent for processing that are not yet confirmed by the crypto custodian. So typically we wait for 6 blocks that have been formed on the blockchain and the confirmation of the crypto custodian. So my 44 cents with that reference STS 2025-10-23-1 is still an open one. And of course, once confirmed by the custodian, moves to the completed section. Now the payment is out, the payment is done, we are happy. From an ERP perspective, from a finance perspective, of course, we need to make sure that it's not only send the money basic to our counterparty, we also need to account for it appropriately. And this is what we do via an account statement. We create a very traditional account statement in the same format as any bank would do. We have tied that to what we call a virtual bank account. Again, the notion of the token as well as the network, we always call an account. We create an account also on the ERP side as a virtual bank account. We have created a standard account statement. It's technically the format CMT 053, which we send back for processing by the ERP. So basically, by making that process very bankish, the stablecoin payment based on the notion of cash equivalent, it's a very seamless process for the end user. So nothing has changed compared to a very traditional payment. Just a new payment method. Process is the same. We enrich the traditional data, the blockchain relevant data, and report it back in the very same way as a bank would report back any payment by means of an account statement. And just to show you a little bit how that looks more in the treasury management, on the cash management side. So you see here, I have in my sample company a couple of currencies maintained here. It's Euro and USD, US dollar. I have different company codes that would be basically reflecting my subsidiaries. And if I open those company codes, I see that I just have a new account. It's an account group. It's the SAP Digital Currency Hub, and it's just the kind of account that we are managing. And this was that sampled notion of the blockchain network as well as the token. And then if I go in, I basically do see my position, my holdings, and of course then can initiate a transfer for off-ramping, and I can also move money from my fiat bank account to my exchange and basically acquire on-ramp stablecoins. So this is basically how we have built the Digital Currency Hub as a bridge between the core ERP system and the blockchain world in a very non-disruptive fashion to make the payment as easy as possible and make the hurdle for enterprises to jump on the more modern means of payment, on a more modern payment rail, as easy and as non-disruptive as possible. I was mentioning that notion of cash equivalency of stablecoins, and that was long a heated debate, especially in the US. A year back, we got guidance from the accounting firms that we can account as a cash equivalent under IFRS, the international accounting standards. And we had lengthy discussions with the big 4 consulting firms in the US how to account for a stablecoin. And the latest guidance from August 2025 is that you can report so-called payment stablecoin, that you can account for it as cash equivalent, which makes that process smooth, seamless, and quite handy. And the notion of a payment stablecoin refers to to the Genius Act, where they have certain requirements for the issuer, how they manage their reserves. For the ones who are more interested in the kind of high-level system architecture, I've brought that picture with me showing you how we basically do that processing of all kinds of payments, from a traditional bank payment, from a digital euro, whenever that is ready, from a tokenized deposits up to a stable coin. So basically in the ERP system, you process all the kind of payment artifacts that are critical, like an invoice payment, or what we call advanced payment management. It's basically more the kind of intra-company type of payments. All payments go into that switch, which we call multi-bank connectivity. And from there, we decide either to route it via deep API integration to a certain bank, or to digital currency as the facilitator between the ERP and the blockchain world. And we then basically integrate via an API called to a custody service, like a Bitpanda, like a Kraken, like a Coinbase, and you name them, to execute the payment on the blockchain. So a very straightforward, very seamless process. So we work always on standard formats like a PAIN 001, which is the input format that you also can send to a bank that gets enriched. Confirmation about payment execution sent back to the ERP via PAIN 002, also standard bank format. And on a daily basis, we do report back in CMP 053, which is the account statement. Now, we have shown you that this is technically quite easy. Now, you might ask, what are the use cases we see? What are the use cases we hear from customers? And it's basically 5 use cases that we have discussed with customers. Of course, it's the use case that I was just showing you. It's supplier invoice payments, and typically with a cross-border flavor. The first customers we had been talking to was a mid-sized enterprise that is also in the software industry and wanted to move from a perpetual license to a subscription model, having significantly lower invoice amounts. They reported an invoice to us about 500 euro, 500 US dollar to a customer in Latin America. And they paid $50 banking fees, which is 10%, basically killing their margin. Moving to stablecoins as a settlement layer on a cheap blockchain such as Polygon, they basically could wipe out 95% of the costs. And I think this is amazing, especially if you want to move into granular, small ticket payments, even in B2B, in difficult corridors or in non-common corridors. Time-critical payments is another important topic that we hear sometimes being cited, especially if you want to move large amounts of money outside banking hours. And for me, the most amazing use case I heard was a bank being in the leasing business with a big EV supplier, and that EV supplier told them, whenever you conduct a lease, if you conclude it on the last day of a month, you need to make sure that the money hits our books at the very same day. Now, if you conclude a lease contract after 6 p.m., even that bank got stuck on their traditional rails. With stable coins, you can move money 24/7, and not only in a kind of traditional corridor, you can do that all around the world. And that was a corridor that is not an uncommon corridor, but also probably not a SEPA corridor. So time-critical payments is another very, very important thing. Always also in Europe, I think we are well done with SEPA. Outside Europe, I think the story is different. Same applies to intercompany transfers. So if I want to move money from abroad to the headquarters, from the headquarters to the subsidiary. We also hear a lot about the gig economy, paying freelancers, paying, for instance, people who work for you abroad in a more service business with a stable coin is considered being a good idea. And one area which I was not aware until a customer talked to us about it was M&A payments. So typically you have to move huge amounts of money at times where banks are closed. So if you close your M&A activity on a Saturday or a Sunday and you need to move $1 billion, it's a tough thing. And actually one customer that asked me, can I move with one transaction $1 billion? And the answer in stablecoin simply is yes. Of course, you need to have the funds in your wallet, but the transaction per se is as easy as moving a cent. Doesn't really make a difference. In the traditional world, even if you do have the billion on your account, you cannot make a transaction bigger than 500 million, at least with most of the banks. So M&A activity is time critical, big amounts of money, few or single transactions, all doable with stablecoins. And this is why I think that more modern finance infrastructure is so rewarding, hopefully for all of us. Currently, the product is live. We do have customers. We call it early adoption. We are still testing with customers. We are still ruggedizing the product. And the story we had is basically PayPal paying Ernst & Young through the SAP Digital Currency Hub from their core ERP. So what I'm showing here is not just lab, it's not just POC, it's real, it's effective, and it's working. Of course, we also did discuss with analysts about the product, and the belief is that this is something which is coming and that our roadmap is promising. Now I would want to dive a little bit deeper into the industry, into the market sentiment that we hear, that we see, and probably share a couple of facts around stablecoin-based payments with the community, which you may or may not have seen. I like very much the quote of Dirk Völkel that he basically was telling an audience at the Stuttgart Finance Summit roughly 2 months ago, where he said crypto infrastructure is critical infrastructure. And I think this is very much true. If you're not able to pay, you are lost. And I do deeply believe that the more modern rails, like a blockchain-based payment rail, will be a critical payment rail in the future. It will be always on, it has to be always on, and it will be critical infrastructure. And I think it's the DEA community, it's many of the DEA members contributing to making that future of finance happen, not tomorrow, starting today. And starting today is also an interesting fact that 8% of enterprises being surveyed, and it was a mixture of industry as well as financial services providers, roughly 1/3 financial services, 2/3 industry. The study of Ernst & Young that I was quoting earlier found out that 8% of corporates already use stablecoins for payments, which is high or low. I mean, it depends always how you view it. But for me, the more amazing number was 54% plan and expect to use it within the next 6 to 12 months. And this shows that some momentum is building. And I think we all need to support that momentum through solutions. I also found that aspect of the study quite interesting, asking enterprises, when would you consider stablecoins as a reasonable payment method? What percentage of your suppliers needs to accept it? And the gray line shows the results of 2022. The blue one, very recent, of September 2025. And I would say it's fair to say the tipping point is basically if 60% would say yes, if 20% of my suppliers accept stablecoin payments, I go with it. So considering the 54% of enterprise saying we want to go into stable coins the next 6 to 12 months, I think it's fair to say that the tipping point will be reached within the next 6 to 12 months. Half a year ago, my customers always asked me, who is accepting stable coins, who is accepting digital forms of money, and it was hard for them to find a counterparty. With that data points, I think we can remain confident that digital assets, whether it's tokenized deposits, whether it's stable coins, will become an established means of payment. While we have shared very much what we are doing, we have shared what we see in the industry, I would also want to share a little bit our view on how we see the adoption happening. Today, we see very much people talking about a stablecoin sandwich, basically ramping on the stablecoin, moving the stablecoin, ramping off the stablecoin, and eventually doing that via established financial services providers. So in many instances, I hear, I want my bank providing me a wallet. I want my bank offering me an on-ramp for stable coins. I want my bank offering me an off-ramp for stable coins. And then I basically kind of use the stable coin just as a sandwich. So I pay my invoice, I I purchased a stablecoin against fiat, I moved to stablecoin, the counterparty basically ramps it down immediately. And if I look in the industry, if I see the circle payment network basically building up such an approach between banks with stable coins, cutting out all the intermediaries in the corresponding banking network, if I see UBIX coming up doing the settlement amongst those financial service providers, I think this is a natural starting point, basically bring the benefits of stablecoin-based payments to the industry without exposing too much of a burden to the industry. What we see happening next is what I would call the stablecoin sandwich. So I take more ownership, I take more responsibility, but I still don't hold to the stablecoin. I basically leave my wallets all with the custodian, but I basically use the tools that we were just showing. I really natively address the stablecoins in the forms of a wallet, but I don't want to hold to them. And the question is also, why would I? Under MiCA, as we all know, stablecoins are non-interest bearing. So why would I keep a stablecoin? Doesn't really make sense for me as an enterprise. In the US, we view the story slightly different. It's also non-permitted to issue or to give interest straight on a stablecoin. However, the distribution channel is allowed to give rewards. Whether you would view rewards as an interest, I think is a subtle difference, how you would call it. But at least you have some benefits in holding to the stablecoin. And this is basically in the longer run, and whether this is now 2 years or 5 years down the road remains to be seen, is where we see the Treasury becoming much more acquainted with digital assets and basically using stablecoin just to move money, and then using more modern forms also of exchanges to basically turn and swap the stablecoin into other forms of digital assets, basically tokenized deposits, to have a yield-bearing instrument as part of my portfolio. So basically stablecoin for money movement, tokenized deposits to generate interest, and I can then choose as a treasurer which kind of risk appetite I do have. I can basically decide myself basically on the kind of digital asset I'm going to have, and basically use DeFi protocols, use newer forms of exchanges such as 21x with instant payment versus delivery means to basically bring the treasury function on a blockchain rail, on a digital asset rail. So is this happening? Is this 3 years, 5 years out? That remains to be seen, but this is at least a perspective which we would see emerging in the market in the next couple of years. This was what I was alluding to. If you're a US-based company or if you have a US-based entity, under the Genius Act, you're also not allowed to get interest. But I found it quite interesting that most of the stablecoin issuers use the distribution channel to grant rewards or give rewards back to the ones holding stablecoins. And that makes it, of course, much more appealing to hold stablecoins in the US than in Europe. You may ask, which networks do we support today? So we today support USDC, we support PYUSD, we support the Unity Euro. Today we support Ethereum Polygon, but that restriction on the network support will soon diminish. We plan as part of our general available product later this quarter to open it up to all networks your custody provider supports. That then of course would include Solana, Base, and you name it, again, depending very much on the custody provider. From a regional availability point of view, we plan to launch later this quarter in the US and EU. And this shows a high-level solution architecture, again, how we connect the core ERP system with the digital asset service providers, having a kind of foundational layer, focusing very, very much on crypto assets, taking care of accounting, payment execution, integration to cash management, and providing data for tax and statutory reporting to our partners. Last but not least, there is, of course, much out to read about the digital asset space, and I've just added a couple of links here to my presentation, which might form an interesting read. It's typically not only our own stuff, it's also what I see in the industry, and I found that many of them quite an interesting read, plus a lot of material that is also distributed via the Digital Euro Association. So that wraps up my presentation. For me, it was a great time presenting to you what we do today, what we see happening in the market. And of course, now I'm super curious to receive your questions in the chat, and Tamara will share that questions as part of the chat with me.
Amazing. Thanks a lot, Bernhard. Really informative and insightful presentation. We do have some questions. So we have one here about the cost savings. I think you mentioned something around 80 or 90% when you mentioned Revolut. So the question is, yeah, you mentioned cost saving for cross-border payments. What assumptions underpin that estimate, and if it's realistic at scale?
That's a good question. So let me quote two numbers. So the first number was the 10%, and the 10% are the findings based on the EY study. And I think this is a very realistic number. Now I was giving the number of 80 to 90%, and that was on the isolated customer case. It was not Revolut. They were basically running through very traditional banking rails, $500 invoice, 50 euro banking fee. And of course, you then can cut that down significantly if you use blockchain-based payment rails. And we all know this is probably more cents to a dollar. And then you come up with the 95%. Of course, if you move then probably a 5 million invoice, you probably also pay 100 banking fee. Then of course, it's not 90% savings. Then you're probably getting more to the 10% savings that people in the study have quoted. Again, it depends very much on your economics. The smaller the payment amount is, the more difficult the corridor is, the higher the relative savings are.
Mm-hmm. Mm-hmm. We have one here about programmable payments. So you show the adoption line, and you have this at the expected adoption, the programmable payments. So the question is, could the hub eventually handle programmable payments features?
We are looking into that. Programmability, I think, has many, many aspects. So the use cases we see cited quite often is escrow payments. So there's no trust in the supply chain. The supplier basically wants to have an advance payment, and the buyer doesn't trust the suppliers. So it's a kind of deadlock. Now, escrow payments in general are quite popular today. I mean, you can go to your bank, you can initiate an escrow process. This is paper-based, expensive, and cumbersome. Now, you can also create an escrow smart contract where you basically deposit money into it. So the supplier sees money is there, and you only release the funds basically upon delivery or upon certain stages within the delivery journey. And then, of course, you need to have a third party in case of a dispute. So that typically would be, again, a bank, but you can make that manual paper-based process, basically put that on chain. And you could even put the triggers in an automated fashion on chain. So whenever you see movements in the bill of lading, that you basically initiate partial payment. So if it's on the ship, you pay probably about 20%. If it's a target harbor, you pay another 60%. And once it's reaching final destination, you pay everything. So that is one scenario that is typically quoted. Another one that we see is split payments. For instance, if you have on the same invoice hardware and software, you have a hardware business, an own legal entity, you have a software business, an own legal entity, you do not want to make cross-company charges. So then you could basically, on the same invoice, basically split the amount and have whatever 60, 80 or whatever distribution and run that straight on the payment rail. I guess the question for me becomes, when we all are getting excited about programmable payments, how do we realize that? If we want to have programmability, we need to be able to sign the blockchain transaction ourselves, which would put us as an enterprise into the position of keeping also custody of our keys. Nearly all customers today tell me we prefer working with a licensed crypto custodian. And I think this is the balance we haven't solved yet. On the other end, it would be very hard to push a smart contract to a crypto custodian and just say, please sign it and put it on chain, because of all the legal obligations they have with regards to AML, KYC, and you name them. And I think this is a tension I see: what is technically possible, what is desirable by the customer, and the regulatory frameworks we see. So this is today for us very much conceptual stage, but we need to see how the ecosystem plays it out.
Yeah, great. You mentioned the use case of PayPal and UI, right? So maybe could you give us a little bit more detail about the PayPal UI transaction, example that you mentioned before?
I mean, from a use case perspective, it's a simple invoice payment. So basically, EY providing services to PayPal, invoicing PayPal, and PayPal basically using their own PYUSD stablecoin in order to pay EY. I guess for PayPal, it's quite attractive to use their own stablecoin. So they, of course, do not need to on-ramp it. It's in a way their own stablecoin. I would assume they have it in their books, in their treasury function, so they simply can use that as a means of payment. The interesting perspective was they do want to do that in an integrated ERP integrated fashion. So they want to book the invoice. They would just want to say, hey, I want to use now my PYUSD because my counterparty accepts it, and then execute it as seamless, as easy, as integrated as any other payment. And it's not only making the payment, but also being able to get the confirmation and reconcile it against the open items on the payable side for PayPal, on the receivable side for EY. And this is not possible in the typical blockchain rail because, as we all know, ERC20 supports sending party, receiving party, amount, full stop. So you do not have that reference field, which you have in a very traditional bank transfer. And that is missing. And in the business world, that really is a pain because that means manual processes. And this is what we need to solve as an industry, one way or the other.
Mm-hmm. We have one here about the network effects. So what kind of network effects or partnerships are you hoping to creating between banks and corporates and the SAP ecosystem with this hub?
I mean, we just get started, so we cannot talk publicly about the partnerships that we have crafted. Now, if we look at what truly is required for us, and I would really say for us as an industry, and you saw it probably on my last slide, let's move into the future and together is really what I mean. We only can do it as an industry. What do we need? Of course, we need to have rock solid stable coins with a high quality. For many stable coin sounds, one stable coin is as good as another, which may or may not be true. But if I talk to treasurers, they basically say, I really want to understand very much about who is the issuer, how solid are they, how they are backed, how they are supervised. So MiCA compliant for me is the least common denominator. And if you saw probably on my presentation, I didn't have a very well-known, very liquid stablecoin in my presentation. Guess why? So we need rock solid stablecoins, and we do have them, and we do get more of them in Europe, especially with all Unity now coming up, but also other players. We saw that big announcement of a consortium of European banks issuing known stablecoin. I think the stablecoins, the rock solid stablecoins, are there and will be there. So this is the first step. The second step is we need to have the easy on and off ramps to the stablecoin. If I tell the customer, go to a crypto exchange and purchase a stable coin, most large treasures of large enterprises shy away. Crypto exchange already sounds a little bit awkward to them. And it's probably perception, it's not reality, but at least that's the perception. So they basically say, even if the perception is not there, it's painful because they need to go under a full KYC onboarding process. And with one of our pilots customers, we plainly failed to onboard them at an exchange. Why? We just wanted to do a pilot. So the people on the ground were very supportive. The managing director of the entity was very supportive. However, the final beneficiary, basically the owner of the entity, would have to undergo a full KYC process, basically the board of directors of that entity. And that was the killing argument for 10 transactions or so. So it's very hard to experiment, and we need to get better there. So we do not need only the kind of crypto native exchanges, we also need to get banks much, much more involved. And we see that momentum happening. So banks are very, very critical ecosystem players. So if my house bank offers a wallet, it's a no-brainer. If the stablecoin is rock solid, it's really, really a no-brainer. So the ramps are critical, the quality of the stable coins are critical. And then last but not least, we need to keep people in the digital asset ecosystem. So on-ramping, moving, off-ramping doesn't make economic sense. This is where the new forms of tokenized assets, real-world assets, become into play, like tokenized money market funds. So if I can basically move the stable coin, get into a tokenized money market fund, and whenever I need to make the next payment, get out of tokenized money market fund, basically instantaneously at ultra low fees, then I think it's a credible case, it's a credible ecosystem that we have. So it's the issuers, it's the on and off ramps, it's the custodians, and it's trusted parties to traditional enterprises. And of course,
Yeah.
we are trying to help building that. And it's not us building it, but helping building it by getting parties together.
Since you mentioned Mika in this context, we have one question here about regulation. So if you could instantly make one regulatory rule disappear to accelerate innovation, which would it be?
That's a good one. What I personally do not like in Europe, it's that intersection of PSD2 and MiCA. So that overlap, I think that makes life difficult. And in general, if you look at the Genius Act and if you look at MiCA and if you just compare the number of pages, MiCA is not a bad regulation, but it's hard to read for a non-lawyer. The US one's way easier to read. And if I want to get rid of one, it's basically that intersection, that overlap between PSD2 and MiCA.
Great. And I think we still have time for more one. Yeah, so what is the most surprising thing you are learning from enterprises experimenting with blockchain technology?
The biggest surprise for me was that it's hard to get access to the tokens, and B, so that was more the small enterprises and the large enterprises, the kind of due diligence they have to do on the entire ecosystem players. So assessing the token, assessing the on-ramp, assessing the custodian, and that takes way longer than getting technically the stuff off the ground. And that, for me, being more a technician and not a finance guy, to me was a true surprise.
Amazing. Yeah, thank you so much, Bernhard, for this fascinating conversation. And before we wrap up, would you like to give some final thoughts, your closing remarks?
I mean, the day